Splendid evening it is to you viewers. Welcome to Special Focus right here on Equity Access, your area of perspective on stock market developments and on developments in the Zimbabwean economy. Ibn Mabunda here. Let's go. On agenda tonight, Miko's Limited, a listed company on the ZSE, issued a notification statement to its shareholders to the effect property estimated to be worth over $70 million has been auctioned for just $2.7 million in an undue process with litigation in progress. Meanwhile, the Ministry of Information, Publicity and Broadcasting issued a statement to the effect government will not be paying civil servants in US dollars but rather in the local surrogate currency, the bond. To discuss this, I'm joined in studio by our very own resident chief analyst at Equity Access, Respect Gwenzi. Respect. Good evening and welcome to the platform.
My pleasure.
Splendid. Let's cut to the chase. Miko's a listed company on the local bourse issued a notification statement to the effect property worth $70 million has just been auctioned for $2.7 million. Would you want to shed more light on that?
Yeah, sure. To give a background of who Mikos is, this is a diversified company operating in the retail sector. They also operate in agriculture and they also operate hotels.
Okay.
And so this is a diversified conglomerate operating in Zimbabwe, and it operates some of the iconic hotels, the Mikos Hotel itself and the Vic Falls Hotel, and some other operations outside Zimbabwe. So with regards to this matter, today the company issued a statement to the effect that some of the shares within the company have been sold by a third party through an auction system.
Okay.
And these are shares that are recorded under Mikos Hotels, which is a subsidiary of Mikos Limited, and also regards to some its shareholding in Tanganda Limited. So Mikos control a significant portion of these underlying assets or these other subsidiary units, and so consequentially it ended up losing a significant value to a third party. And this third party is a service provider who a few years ago was engaged with a view to give professional advice and professional representation regards to an outstanding amount with the Reserve Bank of Zimbabwe. Okay. So back then in the pre-dollarization era, Arabs had seized some of Mikos funds. Okay. And therefore, in recent years, they thought best to retain those funds, and they could only do so through treasury bills. But there was an interest component issue that was involved in the transaction. So now, trying to reconcile the interest component plus the initial amount that was taken, there came issues regards to how to value that piece of that amount that was taken from Mikos. So to that, Mikos has sought representation for engagement purposes so as to recover that money, which of late has been a key source of commotion within the shareholders in Mikos. So the guys feel we have offered our service, you have failed to pay our amount, and therefore the High Court ruled in favor of the third party, which is Core Solutions, to now take action against Mikos. So they went on to put the assets to auction. But the assets basically are shares that Mikos hold in these other key underlying assets. And for perspective, Mikos controls, in fact, within the retail operations, the retail operation is the key driver of Mikos' revenue. Okay. And also Tanganda contributes about 26% to the overall group revenues. So basically, these are key assets within the broad Mikos portfolio.
Central Bank Governor Tsumba requested for Mikos to help the Zimbabwean government actually settle a debt that was worth $20 million. Over the years, government could not repay that amount, which then saw a process that took so many years, and eventually that figure actually came up to about $93 million. Now that they brought in somebody to help them to try and recover that amount, that still has not actually yielded any positive.
What we know from a finance viewpoint is that Mikos has lost value in terms of the amount that the shares or the underlying assets are worth relative to what the auction price is. Because given a figure of 2.7 million whereas they themselves, they are valuing their assets at close to 70 million.
Against an amount of $1.5 million, according to the courts.
Yes, so that's a huge variance in terms of the offer price and what Migos thinks the fair value of its assets are, and this is where the real loss comes in. But if you have to look at market valuation, the market values Migos at about 45 million in terms of its market market value. And looking at these two subsidiaries, they definitely control something very close to 50% in terms of the Migos hotels as well as the Greek operations. So I mean, that's where we need to focus at in terms of the loss that they are likely to and that they have already accrued in terms of these assets that have been sold.
What could be the effect of such an occurrence should things not actually change in terms of their balance sheet?
Yeah, in terms of the balance sheet, it remains the same, but I think it's quite key whenever a company is about to enter into any transaction of significant value that will consequentially have an impact on the performance of the company going forward. They have to disclose to the shareholders that we are structuring such a deal and it might have an impact going forward, which is the same as a legal matter, which has got an impact of changing shareholding. Because once you have a shareholder who is not aligned to the current vision of the company or who might have other short-term interests, like in this case, Core Solutions is just a provider of other services which they may not necessarily be interested in the going concern status of the company. They might be in for an asset stripping, so their interest is not aligned to that of other shareholders who remain in that company. So as a matter of effect, it ends up affecting the company going forward. So I think this is a fundamental issue, but I think Migos should have played its part to inform shareholders. I tried to check through, but I didn't come across any communication of sort to say we are likely to face such legal challenges, and they might come out in a manner A or B, which might cause this impact to the going concern status of the company. So as it stands, when you then look closely beyond what has been published so far, it appears the major benefit, or the person who ended up buying those shares, is actually a proxy of the Moxon family as well, because they are family. This is a stockbroker who has been in the game for close to 20 years, and that's Linton Edwards, who is closely related to the Migos family. So I think this also gives another dynamic in the matter to say, did Migos himself not participate? I mean, did Moxon not participate through a third part? But all the same, if he wasn't informed, then it would have been, it was in his best interest to protect the asset value, since the court had ruled, in disfavor of Migos. But the matter is at the Supreme Court right now. It remains to be seen whether there will be a reversal or otherwise. But I think it does affect the minority shareholders if the ultimate or the end person who buys the company is not aligned to the vision of the company and whatnot. But I think this also demonstrates the depth of the corporate governance deficiencies within that company.
Let's talk about corporate governance issues. At the recently held annual general meeting, there were concerns with regards to the board of directors, and there was also a heated issue which actually has a bit of background. In the past, we saw an issue that involved Cape Grace being disposed of to Mentor Africa, which actually led to the fallout of the Kingdom Migos Africa Limited, which was listed on the ZSE as well as on the London Stock Exchange. And concerns they were raised regarding whether there was directorship in Mentor Africa, and also whether there were any dividends coming off that particular investment. Would you want to shed more light? Do you think that these corporate governance issues could be fixed in the era to come, or perhaps we are actually seeing a plummeting of their system of governance getting into the future?
Yeah, I don't see any reprieve in the very short term. The Migos family tightly holds the company, even after these changes now. If it holds that the High Court ruling stands, or if the Supreme Court still reserves the same judgment, what it simply means is the Migos family remains tightly in control of the group, and Moxon wields significant power in terms of the day-to-day management of the company, the overall the overall management of the company as well from a strategic viewpoint. So I think there remains a big corporate corporate governance vacuum within MiCos, and it's quite clear from the happenings around this disposal of shares or assets that has been done to say, I mean, most of the shareholders are not informed. If these things were communicated or if they were proper corporate governance mandates within the company, the shareholders could have been involved. Everyone should have been involved, and they would have known to say, this is what is likely to happen, this is how we hedge ourselves, this is how the company has to progress. Because who knows, maybe most of the shareholders don't even know the guys who were contracted to possibly even provide those services. And now that there comes an issue of overtaking assets, some people are not informed. So I think it's a big corporate governance concern that I think the ZSC need to closely look at from a MiCos perspective and the overall market going forward.
Well, the government issues a statement through the Minister of Information, Publicity and Broadcasting that government is not paying anybody in US dollars, but rather in the local surrogate currency, which is the bond. Where are we going as a country in terms of the fiscus?
Yeah, I think we are very much in a tight spot as an economy. There's not as much new money to talk about. That's in terms of investments. There's not as much fiscus leeway because we already pegged a budget of 8 billion, and the government had budgeted a bit of a salary increase, which I don't think is anything beyond 10 to 15%. So looking at where we are right now, teachers and all the other civil service, they're demanding for USD payments of the current equivalents of their salaries. So what it essentially means is government have to get that money from somewhere. And where is that somewhere? Is either they get it through exports, and they also get it through diaspora remittances. And if you're looking at the monthly cash retention from in terms of forex, that money is anything close to 400 million. And when you then look at the net in terms of what we are also importing, some of the critical imports that we have, the figure obviously goes beyond even that 400 million. So in terms of trying to play around with the external sector to determine where government can get the money from, I don't think that's an option. But when you're also looking at the fiscus, that's the ability of the economy itself to generate good cash flow and pay its civil service. I think 2018 was a good year in courts in that revenues went up sharply, and so government is expecting about 6 billion from that money, and so that's where they also expect to effect a bit of a minimal increase. But when you look at the inflation gap as well, sitting at 31% right now, whereas if you look at most of the commodities and most of the costs, they are up 100 to 200%. And that figure cannot easily be reconciled into what government can table or had budgeted for. So I think we are going for broke since government cannot re-dollarize. When you look at all the statements that have been said so far, all the convictions that government have said, they cannot move with their eyes closed into a re-dollarization of the economy. The costs involved in meeting the 10 billion or 11 billion money supply that's in the economy, how do you service that? How do you cover those whose dues are within that money? And there are also issues to do with a lot of external costs of borrowings that needs to be settled in USD terms, and there are also the current costs involved with employment costs that have to be paid in USD. So I think government would need a buffer of anything close to 5 billion in actual USD terms to start to effecting a real re-dollarization. Because if they don't do so, if they just do it in an old-fashioned way of going for broke, I think it will cause a big crack. But it's gonna be a tough one. So in terms of the question that you asked, where are we going from the fiscus position?
Exactly.
I think from my own projection, I'm seeing government relenting to the demands, but not to pay in USD terms. I think government will move into effect something of possibly a 50% increase in salaries and in local money terms. and the impact of that is definitely it pushes the local expenditure. It also pushes further inflation.
Right.
And
so this then takes us back to 2008.
I mean, if we are not allowing companies to charge in USD, then we are, because when inflation starts to rise at a faster rate, the ability of the producer or of the retailer to restock becomes minimal, because what you bought it for or what you sold it for is no longer what you are able to pay to restock. So you can no longer beat the cycle. So inflation, once it runs faster than the ability or your ability to see where it will settle at, it means you'll be beaten in any way. So what happened in 2008 was we're using a local currency, and retailers see that their ability to beat the growth of inflation is minimal. So they chose not to play in that space. Why? Because if you buy something now, you sell it for $2, you wake up, even the cost of procuring it again is now above $2. So you now have to find additional money. In fact, you have sold your stuff at a loss. So we will get to that point if we say completely that all the players in the market don't have to price their product in USD terms. But from where we are sitting now, there's a bit of an allowance of charging in USD, also a bit of charging in local money, given the exchange rate and all that. So I think where we are sitting right now, but as we move towards the hyperinflationary mark, above the 50% range, I mean, we're likely to see a vicious cycle of inflation rising at a faster rate, so that it becomes even difficult for some of the guys to restock. So that's the 2008 scenario where you wouldn't find stock in shelves. But right now, we have stock. Some people are able to price their stuff in USD, and prices have tended to a bit of stabilized around a certain rate, which is about 3.5 times the US dollar. So we are likely to see an over expenditure again, driven by government's allowance to give in to part of what the civil service is demanding, but they won't pay in USD. They don't have the money.
As another alternative, are we not likely to see government perhaps ratifying the bond as our currency and then sort of peg it against the US dollar at perhaps the prevailing rates of 3.5?
Yeah, that would have been a noble thing to do, but I think in one of the discussions that we had with government earlier, particularly the Minister of Finance, he mentioned that we don't have a currency. So that's a denial of sort to say, if you want us to peg a currency against a certain currency, then it has to be a currency. And the bond note is not deemed as such according to Zimbabwe's law. But I think where we are moving, it would have been more prudent to possibly try to get the necessary legislation in order to try to officiate it as a currency and then liberalize it so that we preserve a bit of value from the bond note. If you look at Nigeria, for example, they have an official exchange rate of about 350 naira to 1 USD. So I think it's 200 USD. So I think when you liberalize a bit, you also tend to salvage a bit of salvage a bit of value. But that's when you then have to concentrate on fundamentals. Are you living within your means? Are you ensuring that more resources are being committed towards capex? Are you also trying to equilibrate the money supply side of the economy? So I think it would have helped. In my own view, that would have been a better option than going for broke and saying we are actually having a hard landing. Let's do away completely with the local money. But it's inevitable. I would have loved to see a complete movement away from the local monetary equipment. But you see that we are in a quite tight spot, and we don't have to speak from a point of emotions. From a point of practicability of these options, you find that we don't have as much options. So yeah, it could have worked better if they could admit that this Kwisi currency can be converted to be a currency. Okay. And then when the legislation is there, you try to then liberalize it, or maybe to peg it at a more undemanding rate, okay, so to say.
Well, fair enough. Well, within the macroeconomic space, let's talk about gold. head of Fidelity Printers, did say in a statement just a few days ago that government did set a target of 30 tons, but the gold deliveries for the year actually surpassed that, reaching over 33 tons.
Okay. Yeah, I think it's a fit for the nation. That's a record outtake in the modern day history of Zimbabwe. We have not achieved such gold levels. For perspective, I think in 2008 we did paltry 3-ton produce for the whole year, and looking at 9 years down, actually 10 years down the line, we are at almost we've gone up by a huge margin to 30. So that's a big jump. And if you're looking closely at how the contributions are looking like, if we are to look at this chart, we see that there's been a strong emergence of small scale miners, which are represented in this yellowish color relative to that green, which is a contribution of other primary producers. So clearly the small scale miners have come in to change the game, and from 2016 onwards they've been dominating, and lately getting into 2017 and 18, their contributions is now close to 60% relative to that of primary producers.
But it seems for the month of November, their contribution was actually less than that of the large-scale miners. What was the driving force behind that?
Yeah, I think you have picked a very notable trend, but I wouldn't be very much interested in that particular statistic. I think what's important to note from this is a decline in terms of the overall produce that has been coming off from the month of October and November. And these months are very significant in that the hyperinflation, the inflation from September to October, at this point inflation was at about 5%, and it went on to 20-something percent in October, I think roughly about 21% thereabout. And the impact of this is to lower the value of local money. And whereas gold producers were being offered part of their money in terms of local money. So when you sell gold, out of your $100, you were given at least 15% to about 30%, although the official retention was about 75%. Okay. So essentially, these guys started getting Zim dollars in respect of them. In respect of them having sold a certain quantum of produce, whereas they should have got local money. So essentially, they were losing value through the exchange rate. So this is an expression of the dissatisfaction or of the impact that the government is offering them money which is not equivalent to their produce. But now to get to the contribution statistic, as we are getting into October, we are seeing that the gap is closing between what small scale and what primary producers are contributing. In fact, there is an almost half produce, because this is 1.1 and 2.2, that's about 100%. But now you see that it's even below, they produce even below half of what they were producing just the month below. These kind of small scale producers, they are very fluid in that they do small volumes of produce, and they easily sneak out that produce to countries like Mozambique, where they sell them in real US dollar. So in respect of them getting a 15, 30 or 45% retention, they can easily get close to 90% of their ultimate value by side marketing, taking the produce to other markets. Whereas for the big players, they can not easily understate their produce. What they can do is to scale back their production levels, but not to side market, because these are officially monitored. But for those makorokozas, they can easily take the produce, so you can't really say at this period they were not producing. They were producing. There were no significant rains in October and November, so they were essentially side marketing the produce. And this trend went into November and in December as well, because the December figure is showing a 1.2 aggregate output for the overall market. So that's a decline from 3.9 to about 1.2 in a space of 4 months. So that's a telling trend in terms of how gold producers are hedging themselves against the risk of currency. by understating production, by side marketing as well.
Okay. Several companies, perhaps on the large scale side, did actually highlight issues to do with foreign currency remittances. Of note would be Reosim. We saw them closing their operations temporarily for some of their mines in October, and we also saw a cautionary statement issued by Falcon Gold in December citing as well issues to do with foreign currency. Are we likely to see a change in terms of that framework and perhaps encourage contribution from these major players, or should I say these large-scale producers in that particular field?
I think the status quo is likely to remain, although government has said they are going to possibly increase the retention ratio. That's the amount that gold miners will be having out of their produce from what they were getting as measly as 15% to something around 50 something thereabout. I think it's not just about confidence, it's about the pressure that's there on the balance of payment.
Okay.
They also have to meet other needs, and by sacrificing what they were getting from miners and paying it to paying it to other key imports like fuel and whatnot, it simply means they were also depriving those miners. So by now returning that same money to miners, it also means it puts pressure more on the import side of the thing. So I believe there is still issues that needs to be resolved. I don't know whether government will be so sincere to give miners the dues that they promised them to do. But I think at a retention ratio of about 55, there can be a bit of a confidence boost, but at the rate at which the local money is losing value as well, you start to do the maths and you see that it's relatively better off taking your produce to other countries. And sooner than you know it, as we can see from this chart, you realize that at the peak of our crisis in 2008, most of the producers were now taking most of their produce outside the country. That is for the small scale miners. For the large scale miners, most of them had mothballed their operations, which means they were essentially not producing. But when we get into dollarized state, you're getting full value of your produce, and you start to see these huge jumps now. Okay. But you also see the exchange rate starting to come in and all that. But essentially, all this trend is inspired by a stable currency. It's inspired by a stable balance of payment, and also conditions like that.
You did mention fuel. Recently, the Minister of Power and Energy Development did mention that at a price of $1.38, fuel is actually cheaper in Zimbabwe. Hence, you have tankers coming to fuel as they engage in international trade within the region. Would you want to perhaps shed more light on that? Do you agree with the statement?
I think those are debatable issues, but from a basic fundamental viewpoint, it speaks to the exchange rate. All these things boil down to the exchange rate. When you say cheap, you are trying to say we are selling in a local currency, which when we exchange it to the USD equivalent, that money seems to be low, because we should be selling at a USD price of 1.3 or 1.2 something a liter. But we are selling in a local currency which is like 3 times less. So essentially we are selling our fuel at 30 or 40 cents, whereas other countries are selling at between 90 cents and $1 something per liter. Okay. So what is trying to say is that as government we know that we know that we are subsidizing fuel, and these currencies are not equal. The money that you're paying at the pump is not the same money that we are using to pay for that money. And when you look for that fuel, so this is just an admittance that there is no parity between the local money and the USD.
Oh, fair enough. Thank you, Respect, for the insight. We're just going to take a break, and when we come back, we'll look at the sectoral performance of the listed companies on the Zimbabwe Stock Exchange. Please stay with us.